On July the 7th, billions of dollars will automatically flow into SpaceX stock, whether investors want it to or not. This is not speculation. This is mechanics. And if you understand how index inclusion works, you can position yourself ahead of one of the most predictable buying events in modern market history. Welcome back to AI Assets, your daily edge on AI investments. SpaceX has officially been confirmed for inclusion in the Nasdaq 100 index starting July 7th. That means every passive fund, every ETF, and every institutional portfolio that tracks the Nasdaq 100 must buy SpaceX shares automatically and at scale before the opening bell that Monday. This is a timed, forced buying event, and most retail investors have no idea it is coming. Let's break down exactly what this means, who wins, and how to think about positioning before the clock runs out. What is the Nasdaq 100 and why does inclusion matter? The Nasdaq 100 is one of the most tracked indexes in the world. It contains the 100 largest non-financial companies listed on Nasdaq by market cap. Over $350 billion in ETF assets directly track this index, including the QQQ, one of the most traded ETFs on the planet. When a new company is added to the index, every single fund that tracks it must purchase that stock to maintain accurate tracking. They have no choice. It is not based on their view of the company. It is purely mechanical. The result is a predictable surge in buying pressure concentrated into a very short window, typically the days leading up to and immediately following the inclusion date. This has happened before. When Tesla was added to the S&P 500 in December 2020, the stock surged over 70% in the weeks before inclusion as funds scrambled to build their positions. SpaceX is now the next major company in line. Investor context. Who wins directly? Let's talk about the stocks and positions most directly affected. SpaceX itself is the most obvious beneficiary. Forced institutional buying at scale creates a price floor and a momentum surge that can last days to weeks beyond the inclusion date. The stock has already tripled since its IPO earlier this month, and index inclusion adds another structural catalyst on top of that move. But here is the wider portfolio implication. When a large new company enters the Nasdaq 100, other companies get pushed out or see their weighting reduced to make room. Watch for any announcements about which stocks lose weighting. Those names could face selling pressure in the same window that SpaceX attracts buying. The QQQ ETF is the single most direct way to get broad exposure to this event without owning SpaceX directly. As SpaceX enters the index, QQ holders automatically gain exposure. Broadcom, Nvidia, and Microsoft, the three largest components of the Nasdaq 100, may see slight weighting reductions as SpaceX takes its position. Monitor their relative performance in the week of July 7th. What the market is missing here is the angle almost nobody is discussing right now. SpaceX is not just a rocket company. It is increasingly an AI and data infrastructure company. Starlink, SpaceX's satellite internet division, is now the largest internet service provider by coverage area in the world. It is actively being used for military communications, AI data transmission, and remote infrastructure connectivity. SpaceX recently told investors it plans to launch direct consumer mobile services to compete with Verizon, AT&T, and T-Mobile. When the market buys SpaceX for Nasdaq 100 inclusion, They are buying a company that sits at the intersection of AI infrastructure, defense technology, and global connectivity, not just rockets. The valuation story for SpaceX in the Nasdaq 100 is not about launches per year. It is about Starlink's recurring revenue base, which Wall Street is only beginning to price correctly. Most investors thinking about this inclusion are focused on the mechanical buying event. The smarter question is, what is the long-term weight of SpaceX in a portfolio once the dust settles? A company with Starlink's trajectory belongs in the top 10 of any serious AI infrastructure allocation. What happens next? Here is your concrete roadmap for the days and weeks ahead. Watch the pre-inclusion window between now and July 6th. Historically, the largest price moves from index inclusion happen in the 5 to 7 trading days before the official date, as sophisticated funds front-run the forced buying. That window opens now. Watch the July 7th opening bell directly. Volume and price action in the first hour of trading will signal how much institutional demand was already absorbed versus how much is still hitting the market. Watch for Starlink revenue disclosure. SpaceX has been moving toward greater financial transparency ahead of and after its IPO. Any update on Starlink subscriber numbers or revenue run rate will dramatically reprice the stock, independent of the index inclusion event. Watch which Nasdaq 100 components lose weighting. Any stock that gets bumped or reduced to make room for SpaceX could see mechanical selling in the same window, creating a potential short-term dip buying opportunity in otherwise strong businesses. For positioning, the window to act is short and it is open right now. The most straightforward approach is direct SpaceX exposure if you have access, or QQQ as a proxy. Either way, the mechanical buying event on July the 7th is one of the most predictable short-term catalysts in the market this week. And that is exactly what we do here on AI Assets. Identify the moves before they happen. If you want to stay ahead of the AI and tech investment curve before mainstream media catches up, subscribe to AI Assets right now and hit the notification bell. We drop fresh analysis every single day. No noise, just signal. Drop your thoughts in the comments. Do you think SpaceX deserves its Nasdaq 100 spot as an AI infrastructure company? Or is it still primarily a space and rocket story? I want to hear your take. See you in the next one.